Introduction. Hi there, and welcome to our video on building a diversified investment portfolio. My name is, and I'll be guiding you through this process. In this video, you'll learn how to create a portfolio that spreads risk and aims for stable returns. This matters because, as you know, investing can be complex and intimidating. But having a solid understanding of how to diversify your portfolio can help you make informed decisions and achieve your long-term financial goals. What is diversification? So, what is diversification? Simply put, it's the process of spreading your investments across different asset classes to minimize risk. Think of it like a garden. Instead of planting all your seeds in one type of flower, you plant a mix of flowers that bloom at different times. This way, if one type of flower gets affected by weather or pests, the others can still thrive. Types of asset classes. Now, let's talk about the different types of asset classes. These are the categories into which investments are grouped. Common asset classes include stocks, represent ownership in companies, bonds, represent loans to companies or governments, real estate, property ownership or investment in real estate, investment trusts, commodities, physical goods like gold, oil, or agricultural products, currencies, exchange rates between different currencies. Building a portfolio. Now that we've covered the basics, let's talk about how to build a diversified portfolio. Here's a step-by-step approach. 1. Set your financial goals and risk tolerance. 2. Determine your time horizon. 3. Allocate a portion of your portfolio to each asset class, based on your goals and risk tolerance. 4. Consider using index funds or ETFs, which provide broad diversification and can be cost-effective. 5. Rebalance your portfolio regularly to ensure it remains aligned with your goals and risk tolerance. Example portfolio. Let's look at an example portfolio. Suppose you have $10,000 to invest. You might allocate *40% to stocks, *30% to bonds, *20% to real estate, *10% to commodities. Monitoring and adjusting. Finally, it's essential to monitor and adjust your portfolio regularly. This means reviewing your investments periodically and making adjustments as needed. You can use tools like a spreadsheet or investment apps to track your portfolio's performance. Conclusion. That's it for our video on building a diversified investment portfolio. In summary, we've covered what diversification is and why it's essential, the different types of asset classes, a step-by-step approach to building a diversified portfolio, an example portfolio to illustrate the process. Call to action. If you found this video helpful, please consider subscribing to our channel for more educational content. We'd love to hear your thoughts in the comments below. Thank you for watching.